All right, good afternoon, everyone. Today is Tuesday, May 21st, 2013. Let's go over the results first, okay? Let me bring up my spreadsheet. I'll tell you what we had while the spreadsheet is loading here. Okay, that's going to take long. Okay, I can walk through it down here. 3 ticks profit on soybeans, 11 ticks profit on the Russell, 11 ticks profit on crude oil, 28 ticks profit on gold, and we ended up breaking even on the copper this morning. It took us 50 minutes this morning to get to our 2 points. I think I had a couple trades going on at once to get us over the mark, and it took 9 trades in total, and we're plus $340 at the time that I realized we were over 2 points. We had a total of 13 trades in all today, and on the month we are now plus $4,410 per contract. All right, that's the gross. The net would be plus $3,042 if you applied an $8 round turn commission to each of the 171 trades we've taken so far this month. Okay, so that is a net over there, and this is a gross. Yeah, we had a pretty good day. We were up $537.50 a contract, I believe. Gold, we were up 28 ticks on 4 trades. Copper, we were break even on 3 trades. Crude, we were up 11 ticks on 2 trades. Soybeans, we were up 3 ticks on a couple of trades, and the Russell, we were up 11 ticks on a couple of trades. So it all ended up being pretty good. I did have a couple of losing trades this morning. I lost on copper once, and I lost on soybeans once. We were up farther on soybeans. Now, if you have not taken the free trial with us, go to www.cfrn.net/apply, sign up for the free trial. In the free trial, you will get access to everything we have except the members area and the weekly partners meetings, okay? You get access, you're sent an email. Now, in the email, guys, that you're sent, let me just go through this, okay? I just want to show you guys this. In the email that you are all sent, let me do this, and I'll open one up, okay? In the email that is sent to you, it goes something like this, all right? You're sent a link to get into the live trading room, all that stuff. There's also videos in here that go through all the indicators one at a time. Now, there's the CF Flow PB. We don't have that one in here yet because it's still in beta, but it will be in here. But take a look at these videos if you want, okay? If you want to look at the videos one by one for all the individual things. The CFRN indicator contains actually 3 different things, the MA1, the BBC, and the black line. There's a video about it right here, how to set it up, how to do all that stuff. The slingshot is down here. Watch that video too, okay? Those are the 2 things that we have on the charts, the CFRN and the slingshot. We also have the CFSR. That's dynamic support and resistance. We have that on some of the charts in here. We have that running. The CFWTZ, we don't have that one on here, but you know what? We don't have that on here because it's not something that bounces around with price. You set it once and you forget it. Once a week and you forget it. Okay. So take a look at that. If you're on the free trial and you want to see the individual videos, take a look there. Okay. There's a lot of information in this email that you get. There's a thing right here about how to get into the weekly trading zone and the password and all that. But right here, watch this video. It says download your demo platform. That's like a 20-minute video. Now, inside that video, it shows you how to go out to Daniel's Trading, download your demo platform, install. It shows you how to get to the indicator store and install the CFRN indicator set. As it walks you through the process, it tells you to go to a web page and install a layout. Rather than do that, just send me an email at support@cfrn.net, and I'll send you the most current layout that we have. Okay, the most recent. It will bring up everything except these paint bars because you don't have the paint bars yet. All right, that's what you should do if you're taking the free trial. And again, if you're taking the free trial, really take the free trial. Do the whole thing. Okay, download everything. Take the whole thing. Get it on your desktop. Start playing with it. Get used to the thing. All right. Let's see, I guess we can jump right into the trades. If you are on the free trial, you'll be getting an email later today at some point about how to become a partner. Okay, how to become a CFRN partner. If you really want to take the next step and start consistently making money. All right, let's start out with the crude oil, okay? Obviously, I missed a whole bunch of trades on crude, but I got enough to make a profit, okay? We were up 11 ticks on crude oil. There was some nice trades in here. You know, I'll show you the pictures. This is what we look for. Step 1 is a bullish cross of the MA1 over the BBC. Step 2, price pulls away. Step 3, it tests the BBC and bounces up. And step 4, you look for divergence with a red cycle. That's for a long trade, and it's all the opposite for a short trade. You look for a red on the cycle. Blue on the cycle for long, red on the cycle for short. Okay? All the same stuff. Step 1, 2, 3, 4, over and over and over again. There's one more picture, this one. If price doesn't pull all the way back to the BBC because it's got so much momentum, you draw a trend line up the bottoms, from the swing low up the bottoms, and look for price to close down below the trend line. When it does, you still need to have the divergence down here. But when it does, you can get into that, and you expect the green line to work its way into the cycle. Okay? The green line on the slingshot to work its way into the cycle. Like it did here, and like it did here. Alright? So the long trade over here would have been the up close above the trend line for that move up. The short trade over here would have been the down close below the trend line for that move down. Alright? Right in here, the long trade would have been the up close above that trend line for that move up. So you can see it happen again and again and again and again. The first opportunity we missed right here, right at the open on crude oil, was a long trade, close above the trend line. There was another one right here that would have gotten us a break even. A short in here that would have gotten us 10, 12 ticks profit. A short over here that would have gotten us, would have provided at least anyway. Much more than that, like 15, 20 ticks profit probably. Another short over here that we actually did take, we took a small profit on, I believe. Another one over here, we took a break even on. How many trades did I take? I took one more trade on crude somewhere because we ended plus 11 ticks on crude. Alright, and that was pretty much it. Hang on, if we took one more trade on crude, I gotta update my spreadsheet. Hold on. I gotta make sure this is accurate. We took 14 trades today. Alright, so it's all pretty much the same. We took 14 trades. I had 2 break-even trades on crude. I got into one of these. I don't know which one it was, but I got short in one of these moves down, and I picked up some profit on it. Probably 9 ticks, or 10 ticks, I think is what I got. I don't remember which one it was, but it was probably over here where I hadn't drawn the... probably right in here where I hadn't drawn the ellipse because I was actually short the thing at the time. Alright. And I remember picking up 10 ticks on it. 10 or 11. I wasn't sure how many I picked up, as a matter of fact. But it turns out I have 11 ticks profit in crude. Anyway, it kept going down, and we ran out of opportunity because we ran out of divergence. Alright. Once it started to move up, there was an opportunity to get long right in here. I hadn't highlighted, but it was right in there. And let's see, there was no divergence really to speak of in here. There was another long trade there that you could have taken based on momentum if you wanted to. A little more risk on that. There was a short trade in here. This was right at 11 o'clock. I missed that. I missed the other short trade right in here. There's a couple of them right in here that I missed. Some nice trades that I missed here on crude oil. I don't remember missing all these. I must have been trading something else at the time. And making money somewhere else. Actually, you know what? I remember I took like a half an hour this morning to really just go through everything. And as it turns out, the recording had a problem converting. So hopefully I'll be able to do it in Vimeo. But anyway, that was our morning on crude. We were plus 11 ticks on crude oil. We missed a whole bunch of nice trades, though. There was a ton of opportunity on crude this morning. That's pretty much it. Not every trade was a big winner, but most trades were. Okay? If you traded crude oil today. Now, the Russell, we didn't trade the Russell much today because we started out with a weekly trading zone on the ES. Okay? I took 2 trades on the Russell, I think, right? Yeah. The Russell is all around the trading zones, too. You can't see them right here. Let me just flip to a different times frame and then back. You can see the weekly trading zones here on the Russell. So it was all about the weekly trading zones as well. It was in and out of them, all around them. Yeah, we took a few trades here on the Russell. We took a break-even trade right here, and we took 3 trades on the Russell too. Hang on, Go back to my spreadsheet. Hold on. I need to update my spreadsheet. Again. You see, I'm trying to be as accurate as possible. Took a long trade here. We got a break even on. We took a short trade over here. We got 9 ticks profit on. And we took a long trade over here that we ended up only getting 2 ticks profit on. Now, we missed an opportunity right in here. And in here, we were looking for the thing to get up to the weekly trading zone. It never actually tapped the zone in here. It almost got there, but it didn't quite get there. After the morning session closed, we came down, well, right as it closed, we were inside the weekly trading zone. It changed directions out of the zone and gave a nice long opportunity right here off the BBC. If you recall the picture that I brought up, this is step 1 is the cross, step 2 is a space, step 3 is a pullback, test of the BBC with an up close, and step 4 is the bullish divergence with a blue cycle. All right, so the up close of this bar right here was a long trade on that. That was pretty much it on the Russell. Okay, so we ended the Russell plus 11 ticks. All right, we did have more in the Russell at one point. In this trade right here, we were up. I think we were up at one point a max of 16 ticks, but I moved my stop up, and it came back and took me out. Gold. Now we had a bunch of trades on gold this morning, so I think I kept track of all of them. Gold, as usual, lately gold really jumped around quite a bit. So there was ample opportunity in the gold. There was ample opportunity in the gold to take a bunch of trades. I'm scrolling back here to the beginning. All right. As the day started out, we missed trades here. Missed a long trade there. We missed a long trade there. A short trade right here. We missed a short trade over here. Missed a short trade over here, a short trade over here. Missed a short trade here, and we finally got one over here. All right, I think we got a break even on this. We had moved our stop down to break even. It put in some bottoming action here. I told everybody if we didn't get a lower swing in here, then it's bottoming action, and you can see it was indeed bottoming. We jumped in on here on the long trade on the way up. We got some profit on that. We did it again right there. Got some more profit. We missed a short trade here. We missed a long trade there. We missed a long trade there. We missed another long trade there, and there, and there, and there, and there, and there. You can see I was drawing things on here, but I kept missing the trades. Now, when I say I missed these trades, I didn't miss them because I didn't want to take them. I missed them because either they moved too fast and I didn't get filled. I missed them because I was answering questions from somebody, or I was looking at another market, or I was trading another market. Or this morning as I said, I spent about a half an hour going through just everything. And so I ended up missing a bunch of things. I think this was my last gold trade over here. It was a nice short trade. I think I took 10 ticks profit on that, 10 or 11 ticks profit. Something like that. But that was it. Okay, that was it on gold. There was more opportunity in there. We didn't get it. Okay, there was plenty more opportunity. I mean, there was, we were up $537.50 per contract today on all the markets that we traded, but we could have done that just on gold. We did half of that was on gold, but we could have done it all on gold easily if we were just paying attention to gold this morning. Easily. All right, so that's it. That's all there was. There were more opportunities. Many more opportunities in here as the morning went on. Right now we have some bullish divergence, but we're not coming off a higher swing, so I wouldn't go long right here, right at the moment. All right, you didn't continue the trend. There was a shorting opportunity right here on the way down, right there for that big move down. Now that big move right there, 78.6 down to 75.7. That's $290 a contract, that move alone. All by itself right there, $290 a contract. Over here, the move up right here was easily another $290. So when I say you could have gotten that whole $537 per contract on gold alone, there's 2 trades right there that would have done it. Okay, moving off of gold. I only pointed out a couple of trades here on the NQ, or actually just one trade on the NQ because I was so busy. I was in the zone for a little while there this morning. I think I forgot to breathe. we had one long opportunity in here that I pointed out on the NQ. Now, obviously, there was more than one opportunity on the NQ. You know, there was another one right here. There was another one right over here. There was one right here. There was one right there. There was, I'm looking for the up close, and there was nothing in there. Nothing in there. On the way down in here, there were shorting opportunities. One there, one there, one here. You know, there was plenty of opportunity on the NQ. Okay, we didn't take any of them. On the soybeans, we took a couple of trades this morning. Let's see. Let me blow it up so you can see it a little better. All right, our first trade right here, we were plus 11 ticks on the soybeans on the first trade we took right here. We had bullish divergence, a close above the trend line. With the bullish divergence, we got long and we took 11 ticks profit. The next trade that came along, we had bullish divergence again and a close above the trend line over there. But we jumped into it and we got stopped out of it. All right. That was all we traded on soybeans. We pointed out a couple other things. I think we had missed this in here, and we missed this. We pointed this one out in time, but we had missed this and this. I didn't want to take this because we didn't have the divergence. Okay, but we missed the short off the BBC here, and we missed the long off the BBC there. And that was pretty much it. That was all that we looked at on soybeans. All right. We ended the soybeans plus 3 ticks. Now, let's see, copper. Well, the euro had a couple of trade opportunities in here, too. The euro jumped around a bit. Sorry, let me scroll over here to the euro. From the open at 9:30, there was bearish divergence right in here with a down close below the trend line, which would have been right here. This is the down close below the trend line, was right there with the bearish divergence. Okay, it turned around and went back up through the BBC. Then there was an up close above the trend line, which would have been right here. Actually, not down there. Would have been right in there. If you missed that first one, there was another one right here. Okay, on the euro. If you missed the first one, there was another one right there, and up it went. All right, that was it. We stopped looking at the euro there. All right, the copper. Let's go over the copper. And we had a few trades on copper this morning. The first one was a loss. We lost 7 ticks on this first trade right here. Then I said it's bottoming out right here. If we don't get a move down, a lower swing down here. We got long in here. We ended up taking a break even on this. This one took forever for us to take this break even. It seemed like it felt like I had this trade on for an hour. Once it finally moved down, it moved down. It really moved down. We missed all this. There was really actually no opportunity to get into that. We did get in here as soon as we had the opportunity. We got in here. We took 7 ticks profit. That brought us back to break even. All right. It pulled back up, tested the BBC in here. Now, looking at the trend line, that is what you were looking at for a trend line. Okay. So by the time it closed down below that trend line, you were over here and you didn't have any divergence left. Okay, and the thing tanked off of that. There was another opportunity here to get short, another one in here to get short, but we lost the divergence here. All right, as it turned around, it gave us an opportunity right in here, this up close off the BBC to get long. Now, this is copper. All right, you had your bullish cross right here over the BBC. Price pulled away, price pulled back, tested the BBC and gave an up close with bullish divergence and a blue cycle. All right. Every one of these markets, we're using the same trade setup. It may seem like we're jumping all over the place, but it's the same exact trade setup over and over and over and over and over again. Okay? So we got long there. We didn't, but you could have gotten long there. There was a long in there. There was another long right in here with a bullish divergence close above the trend line. Pulled down, tested the BBC. You would have been drawing your trend line down. You needed an up close. Right here would have been the up close. And that's pretty much it. You would have lost your divergence on that. You have your bearish cross here. A little bit of divergence setting up. If it tests the BBC and gives a down close, you could have a shorting opportunity there on copper. All right. What did you want to see? The 6B. The 6B. 6B. M3. All right. you see, we don't have to change any indicators or anything like that. We can just jump all over the place, whatever market we want to look at, the same indicator set. I do have to remove the weekly trading zones, but the same indicator set. Now I have to remove all the drawing objects. But it's the same indicator set, the same exact trade setup over and over and over again. All right, here at 9:30, you had a bearish cross, tested the BBC with a down close with bearish divergence and a red cycle. You get it? It's the same thing over and over and over again. So short was right in there. On this one, it didn't hit the BBC and the cycle was the wrong color. So you draw your trend line, you have your down close below the trend line, your bearish divergence, and a short opportunity. On this one, it went through the BBC, pulled back down, tested it, gave an up close, bullish divergence with a blue cycle. Okay, you guys following this? It's the same thing over and over and over again. Okay, on this one, the up close would have been right there. All right, it would have been right here, the up close above the trend line. That's pretty much it. It's right here, has a short. Bearish cross, this bar pulled away from the BBC, tested it, and gave a down close right here with a bearish divergence and a red cycle. So right here, that bar was a short. That is the 6B. Okay? And you see we can jump to whatever market we want right here. I mean, we can go to orange juice right now if we wanted to. And it'd be the same setup, the same indicators, same everything, over and over and over again. It doesn't matter what market it is. Yeah. Do you want me to go to orange juice? What time is it? 12:38. Okay, let me just see. That would be softs. Is that in softs? I don't have anything in my softs list. How about meats? I don't have anything in my meats list. Grains. What is it? Orange juice?
Soft. Yeah. Go to softs.
I don't have anything in my soft list right here on this.
All right.
On this
Type
account.
in simple OJ-MN3.
MN3.
There you go.
Frozen OJ.
Big warning flag here. Very illiquid.
Okay, so you're going to have a spread usually.
Yeah.
All right, I just wanted to illustrate that we can jump to whatever market we want, and you're going to have the same setups happening over and over again. Now you have your bullish cross, you tested the BBC. In here, this is the up close, and it's before the black line got below the BBC. So you have your bullish divergence, a blue cycle. Your long is right here. Pulls back down, tests the BBC. Now right here, the cycle is red, so you need an up close above the trend line. The trend line goes like this. So your long, so far, just at a glance, your long is there. Your long is there. Wait till you get a higher swing. That would be over here. Pulls back and it tests the BBC, but you lose your divergence, so you're not getting anything in there. You wait until you get a higher swing again. That's right in here. You don't have any divergence again. It changes directions on you. You're not coming off a higher swing again, so you're not going long. Now you're looking at shorts. Okay, so right over here, short trade, bearish divergence, red cycle. You didn't put in a lower swing, so you're not looking short anymore. Now you turn around and you're going long again. Same thing over and over and over again. You would have had a long right there that didn't go anywhere. That would have stopped you out. Okay, but I put in a higher swing, came back down, tested the BBC, gave an up close. You had red on the cycle, so you have to draw a trend line. Okay, you get your up close above the BBC. Above the trend line, which is right there. So you're long again. All right. It doesn't matter what market it is. You can trade anything using this. Okay, so I'm going to go back. Oh, first I'm going to, hang on. We'll just jump over to the dollar, I guess. But once it gets there, I'm going to have to remove all the drawing objects. All right, here's the Aussie dollar. Same thing over and over again. Now the dollar trades better in the wee hours. Okay, because that's when that market's open over there. But it still did fine here. It still did fine in here. You had bullish divergence in here. You would have had to have drawn a trend line with the bullish divergence and look for the close above the trend line. All right, so your long would have been right there. In here, it comes back, it hits the BBC, but the cycle's red, so you need a close above the trend line again. So your long's right there. All right. Hopefully that has illustrated the point well enough. If you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. Okay? cfrn.net/apply. Sign up for the free trial. If you are on the free trial and you want to become a partner, you will be getting something in your inbox today. And if you don't have it in your inbox by tomorrow, just send us a quick email and I'll send it to you. It probably got stuffed in a spam folder somewhere or something like that. All right. Again, we're up 537.50 today, and on the month we are now, since I adjusted it for those 2 extra trades that I had missed in my count, we are now up $4,410 per contract with a net of $3,026 a contract after commissions. Okay, that's where we are on the month. All right, recording